Hello, welcome to part 2 of our lesson on irrecoverable debts and allowances. We are going to take a question straight away. I'm going to solve the first question with you involving the accounts for bad debt and for provision for doubtful debt. And then from there, after we solve the question, we're going to talk about bad debt recovered and then the provision for discount on debtors. And so let us go straight away and look at the question and then discuss that together. The following information was extracted from the books of Domprey Company Limited. So we have year ended 31st December, and we have the debtors at the end of the year after bad debts are written off. Take note that the debtors are after bad debts are written off, and then we have bad debts written off itself as a column. Now take note that even if they had not mentioned that this is debtors at the end of the year after bad debts are written off, you should still understand that once you have bad debt written off, it means it has already been taken from the debtors figure. And take note that they have used the word debtors here, but I told you that the figures there are money that is due from debtors, and so it's rather called receivables. So take note. And then finally we have provision for bad debts, or that is the percentage, 5% throughout. So we have 2015, 2016, 2017 and 2018. Each of them, the receivables figure is there, and then the bad debts written off figures are there, and then we have the percentage for provision each year. You are required to prepare bad debt accounts. That is the first one, II, provision for bad debt account. Then we have profit and loss. Then we have the income statement extract, and then the statement of financial position extract. Okay. So this is a very simple question, and the topic is simple as always. We have the figures for receivables to be 20,000 for 2015, 25,000 for 2016, 35,000 for 2017, and then 32,000 for 2018. When it comes to the bad debts written off, we have 2,000 for 2015, we have 2,500 for 2016, we have 2,700 for 2017, and then 3,000 for 2017, for 2018, sorry. Now take note, you see that we are told that the bad debts are already written off. So it means that when we are calculating the provision for doubtful debt, we are going to calculate the provision on the receivables figure straight away. Now, if the bad debts were not written off, this is where I didn't mention it in the part 1 of the video. If the bad debts were not written off, then it means that we would have subtracted the bad debts figures from the receivables figures before the net figure we calculate provision on. If you have bad debts to be written off and then you have provision figure to calculate, please, if the bad debt has not already been written off, make sure that you write off the bad debt from the debtors or the receivables figure, meaning that you are going to subtract the bad debt figure from the receivables figure. Then the net receivables that you are left after subtracting the bad debt is what you are going to apply your provision for bad debt rate on. So take note, over here it has already been written off, so we are free to apply 5% directly on the remaining debtors figure or the receivables amount. That is the meaning. So we are going to prepare. The first requirement is for us to prepare the bad debt account, and then we are fortunate the bad debt figures were already given. So we open the bad debt account and then we do that straight away. Okay, so in the books of Domprey Limited, Domprey Company Limited, we have our bad debt account or irrecoverable debt account. The currency is in Ghana cedi. And this is where I want you to pay attention to something. We are preparing this account year after year. We have 2015 to 2018. So we are going to prepare year after year. Now, make sure that you are not combining 2 years in one. I've seen some before. Okay, and some books have even made those mistakes. So if you are studying the books, you should be careful. Some information there may not be exactly what you need to put there in the exam. What I'm trying to let you understand is that you have to finish preparing for 2015 Close it off before you move to 2016 and prepare. Because what we are doing here, practically in the office, we are not going to do that. There is no way you wait for 4 years to expire before you prepare accounts for all the 4 years. No. We do prepare accounts year after year. However, for the sake of examinations, we are trying to present how they will look year after year. It doesn't give you the liberty to combine 2015 and 2016 account in one, because they are 2 different years, 24 months, and you would have applied the periodicity concept and done for 2015 and a year later before you do for 2016. So there is no point you combining them into one. So please take note. Each of them represents a different whole 12 months calendar year, and you need to respect that. Okay, so in the first year, 2015, the bad debt figure that we have is 2,000 Ghana cedis. Remember that I told you the double entry for bad debt is that you debit your bad debt, you credit your debtors account. Okay, so we are not preparing the debtors account in this case. We are only showing the bad debt account, how it will be. And so definitely it will be in the final day of the year, 31st December. Remember that we are told the accounts are prepared to 31st December each year. So on 31st December, we will say debtors, because corresponding entry must go into debtors account, and bad debt account is an expense, so the amount is 2,000. That is it, and that is all for the year. You're only showing how it's going to be. So now that you have put debtors 2,000 here, then at the end of the year, I told you that this account will be closed to the income statement, or what we call the profit and loss account, whichever one that you want us to write. So let us write the profit or loss account. So it means that at the end of the year, remember that I used the last day of the year, and I'm going to use the same last day of the year because we are closing the account, and it's going to be closed to profit or loss. You can decide to call this income statement, and you are not wrong. Okay, or so we can call it income statement. 2,000 Ghana cedis. Then you have finished, and you close it off with the double underline. Please and please again, do not show any balance carried down in this account. Do not show any balance carried down in the bad debt account that we are preparing under this topic. We just close it straight. So instead of saying balance carried down 2,000, we rather call it profit or loss or income statement, if you want to call it income statement. But just make sure you don't call it balance carried down. So this is simple. The same figure that you have been given for the irrecoverable debt or bad debt, you debit it in the name of debtor, you credit it in the name of income statement, then you close it off. Then you are done with 2015. Then you go to 2016 and do the same. Go to 2017 and do same, and then you are done. So please, it's a very simple topic. Don't get confused. So we move to 2016. So you see that I have left this whole line for the date. Then I'll come to 2015 and I'll ask myself, what was the bad debt figure for 2016? The 2016 figure was 2,500. So on the last day of the year, 31st December, I will say debtors, 2,500 Ghana cedis. Then on the same last day of the year, I will say income statement or profit or loss, 2,500. Then I do the double underline. I am done with 2016. Then I move to 2017. The bad debt account is very, very, very easy. You don't have to complicate it. So we move 2017. The figure was 2,700. And so we use one whole line. That is always my advice. Use one whole line. You see, some people may decide to just put the years here and just do, well, I'm not saying you are wrong. But for clarity's sake, remember that even in the exam, you are told that marks will be awarded for clarity of expressions and orderly presentation of materials. So you just have to make sure you are doing a neat work. So leave one whole line for the year. Then on the next line, you pick the figure 31st December. It will be in the name of your debtors, 2,700. And then on the same day on the credit side, you close it to profit or loss or income statement. 700. Then you are also done. Then you move to the final day, final year, which is 2018. Now in 2018, the figure for irrecoverable debt was 3,000. So the last day of the year, debtors 3,000 Ghana cedis. Then the same last day of the year, we close it to the profit or loss or income statement, 3,000. Then you are done. So this is all about the bad debt account. It's very, very, very simple. All right. And now that we are done with the bad debt account, we are going to use this space to prepare the provision for doubtful debt account or the allowances for receivable account. So let me just create that as well. Okay, so we call it provision for doubtful debts account, or you can call it allowances for receivables account. Then you show the same year after year. 2015 begins. Now, when we come to the provision for doubtful debt account, this is how the outlay is going to be. Remember that the provision for doubtful debt account has a credit balance. It's a revaluation, it's a valuation account. This is a valuation account, and it has a credit balance. And therefore, because it has a credit balance, the first figure or whatever thing that we are going to record in there first goes to the credit side. When we go to the bad debt, we recorded first on the debit because it has a debit balance. So we need to get the provision for doubtful debt figure for the year 2015, record that, close it off. Come to 2016, record that, close it off, just like we've been doing. But with the closing off, we are going to factor the differences, and that is where you need to pay attention. So in 2015, we have 5%. In fact, the 5% run through. 5% to be calculated on 20,000. So you show workings, okay? But I may not show workings. So let's say workings for the provision in 2015 is going to be 5% on 20,000. And that is going to give us 1,000 Ghana cedis. So that is it. Remember, you have to make sure you are applying the rate on the remaining receivables figure after you have written off bad debts. And so in 2015, we have 1,000 Ghana cedis as provision. Okay, so let us just complete the workings for all, so we can just pick them. So in 2016, it's still going to be 5%, but this time it's going to be calculated on the debtors figure, which is 25,000. And 5% on 25,000 is going to give us 1,250. So that is it for 2016. And then in 2017, it's still going to be 5%. We look for the receivables figure in 2017, which is 35,000. So on 35,000, and then that is going to be 1,750. And then finally in 2018, we have 5% on 32,000, which is the receivables figure that is there, and that is going to give us a provision of 1,600 Ghana cedis. Okay, so this is it, 1,600 Ghana cedis. All right, and so these are the figures that we are going to use to prepare the provision for doubtful debt account. Now remember that the percentages could have differed from year to year. The question was lenient enough to make it the same. It doesn't mean it could be the same throughout all questions. You may have each year's rate to be different. And there could be a year where they will tell you that bad debt for that year was not written off. So you have to take off that bad debt figure before you apply the rate. So you should be very vigilant on that. So yes, you have our provision for doubtful debt figures. Now we are going to prepare the accounts, and I told you that we are going to be mindful of the increase and the decrease. You could see that from 1,000 to 1,250 is an increase of 250. From 1,250 to 1,750 is an increase of 500 Ghana cedis. But from 1,750 to 1,600 is a decrease of 150. So we are going to factor and watch how sweet it's going to be. So in 2015, I remember I told you it has a credit balance. The double entry for provision for doubtful debt is that you debit profit and loss account and then you credit the doubtful debt, or you debit the income statement. And so usually it's done at the end of the year. So on the credit, remember to write on the credit side first, 31st December, we are going to write it in the name of profit or loss. Profit or loss. And the amount is 1,000 Ghana cedis. That is all for the year. Now, because we have already recorded it in the name of profit or loss, when we are closing it, we cannot close it again to profit or loss like we did for the bad debt account. No. So for provision, for bad debt, initially we recorded it at debtors. But here we've called it profit or loss straight away because it should end up as an expense in the profit or loss account. So when we are closing it, we close it as balance carried down. We do not permit balance carried down in the bad debt account, but we permit balance carried down in the provision for doubtful debt account. The reason why we are permitting the balance carried down is that we need to take the balance down as brought forward in the following year so that we can compare and take the difference. That is why you've been seeing provision for doubtful debt in your trial balance. When you are preparing your income statement, in the trial balance, before you prepare, you see provision for doubtful debt in the trial balance. It's in the trial balance as a balance brought forward. But you do not see balance brought forward for bad debt or recoverable debt. It doesn't happen. It's not in the accounting principles. And so we are going to close this 1,000 straight away, the last day of the year, 31st December, as our balance carried down, 1,000 Ghana cedis. Then we close it off. So we are done for 2015. So please, just record it to profit or loss and close it to balance carried down. Then you move to 2016, which is the following year. You see that in the first year, there was nothing to compare. So all the figure is going to profit or loss. And remember that I told you that whatever that is going to profit or loss is your expense. If it's a decrease, it's your income. So in 2016, remember that there was a balance brought forward from 2015. So you have to bring that down first in 2016 before you even look at the figure for 2016. Very, very important. So that will be on the first day of the year, 1st January. Remember that you have to be mindful of the dates as well. So that will be a balance brought forward of 1,000 Ghana cedis from last year. Then this year's provision is 1,250. This is where the issue comes in. We already have a balance from last year of 1,000. This year we have 1,250. We are only interested in the increase. So was there an increase or a decrease? Yes, there is an increase of 250. So when you come into the account for profit or loss, you only record the increase. I repeat, record only the increase. So you are going to, on the last day of the year, 31st December, profit or loss or income statement, if you choose to call it that, you are going to record 250. Where is this 250 coming from? The difference between the 1,250, which is this year's provision, and the 1,000, which is last year's provision. So you bring the balance down to compare and get the difference. And then you record only the 250 in the provision for doubtful debt account. We are not done. So now we have two figures. So we have to balance it off properly. So at the end of the period, we are balancing off this account. So we are going to have 1,250 and we are supposed to have 1,250 as well. Now, on the last day of the year, we are supposed to have a balance carried down. And the balance carried down is supposed to be the combination of these two, which is going to be 1,250. So you see what I have done? What I have done is that even though I took the difference, the balance carried down is the same as what we calculated for the year. Now take note. The principle is that you need only the difference for the income statement or the profit or loss account. But your balance carried down must always be equal to what you calculated. If you finish and your balance carried down is not equal to what you have calculated, that is when you are wrong in what you are doing. And so it is the balance carried down that must be equal to what you calculated, not necessarily what you are taking to the profit or loss account or the income statement. So you take the difference to the income statement, but eventually your balance carried down will be the actual provision for the year. And that is why I told you that when you get to the statement of financial position, You are rather going to subtract this year's provision, the full one, from the receivables figure, even though only the difference is going as an expense, but this whole figure is going. In the statement of financial position, we only take the balance carried down figures to the statement of financial position. So that is why we are going to, it explains why we take the full figure and not the difference to the income statement, to the statement of financial position, because you get that back at the balance carried down. I'm sure you are okay. If you didn't understand, we are not done. We are moving on. So in 2017, let me just draw a line here to separate these two accounts. So in 2017, we are going to have an opening balance from last year. From last year, we are going to have on 1st January, we are going to have a balance brought forward from last year, 1,250. So you see that we have brought back the balance to come and compare. Then we go back to 2017. What was our provision for 2017? 1,750. Comparing with last year or comparing with the balance brought forward, is it an increase or a decrease? It's an increase. The difference is 500. So you come and write on the last day of the year, 31st December, profit or loss or income statement, 500. So that when we sum these two up, it will be the total of 1,750 as our balance carried down, which is what we actually had for the year. So we take the difference of 500 and we call it profit or loss. And then we can now balance off the account with a total of 1,750. And now, on 31st of December, our balance carried down is going to be 1,750, which is equal to what we actually calculated for the year. I'm sure your understanding is coming. Then let's look at the final year, 2018. In the year 2018, we are going to bring down this balance again. So 1st January, balance brought forward will be 1,750. Then we come to the actual provision that we had for the year. That is 1,006, which is lower than this. So you see that we cannot add up the difference. Because it is lower and it's a decrease, the difference is the difference is 150. But it's rather a decrease, not an increase. That difference will rather come to the debit side to subtract from this, because it's rather a decrease. And so we'll come to the credit side, 31st December, in the name of profit or loss. So you see that this time the profit or loss did not appear on the credit side. It rather came to the debit, and the difference, which is 150. That is how we prepare this account. So now you see that all these ones that were profit or loss on the credit is supposed to appear on the debit of the profit or loss account extract, meaning they are expenses. But because this has appeared on the debit, it will rather appear on the credit of the profit or loss. That means it's an income. So that is why I'm saying when it's decreasing, it ends up as an income. Then finally, we will say 31st December, balance carried down. So now when we are closing off this account, the total will still be 1,750. But the balance carried down, which is the difference, is going to be 1,600. And that is exactly what we had from the calculations. I'm sure by now your understanding is okay. You have been able to understand what I've explained. So this is how to go about the bad debt account and the provision for doubtful debt account. That is all. In fact, the most important is what I have done. If there is any other thing to do, we may just have to look at the extract, the statement of financial position extract, how it's going to be, and maybe the statement of profit or loss extract. That is what we are going to do now. Okay, so when we get to the extracts, it's a very simple thing. We are not even going to close off the account. If you are using the T profit or loss account, for example, then wherever you see profit or loss or income statement on the credit, it means it will appear on the debit. And this one will appear on the credit. That is all. And you are going to show that year after year. That is how to go by the extract. And then when we get to the statement of financial position extract, we'll just pick the actual debtors figures. Then we less the provision for doubtful debt. We are not going to less the bad debts. Okay, let's see how we are going to go about that. So like I told you, the extract is not much of a big deal. We are told to prepare the profit or loss account extract or the income statement extract. So assuming that I'm just going by the T account formula. I'm using the T so that I will enhance your understanding. So income statement extract or profit or loss account extract. Now, the reason why I'm using the T style is to let you understand a principle, and the principle is simply the double entry principle. And that is, wherever you see income statement, from what we have done, the bad debt account and the provision for doubtful debt, if you see income statement, like for example with the bad debt, there was income statement on the credit side throughout, or the profit or loss account, so they will appear on the debit throughout. Then when we go to the provision for doubtful debt, there was profit or loss on the credit throughout. They all appear on the debit, with the exception of the last one that appeared on the debit, which will be shown on the credit. And we are going to show this year after year. So for 2015, okay, when we come here, we are going to, remember it's coming from the bad debt account. So we are just going to show bad debt at the end of the year, 31st December. Bad debts, and the figure was 2,000. That was what was coming here. The bad debt figure was 2,000. And then we are still going to show provision for doubtful debt, which is 1,000. Then we are done for 2015. We are not going to close it. The extra simply means that show the corresponding entries where they will land as well. So that is for 2015. And then you move to 2016. You do the same. You show the bad debt. The bad debt figure was 2,500. And then you show the provision for doubtful debt. Remember, the provision for doubtful debt in this case was only the difference, which was 250. Then you are done with 2016. Then you go to 2017. You do the same for the two. Then 2018. Let me just do that for you. In 2018, the bad debt figure was 3,000 from what we have calculated. But the provision for doubtful debt rather ended up on the debit, so it's going to come to the credit side. Provision for doubtful debt, and that is going to be 150, which was the difference. So this is how to show the income statement extract. There is no need to close it. It's just an extract. Okay. And then I'm just going to show the statement of financial position extract as well. And then we'll be done with the part 2 of this video. Statement of financial position extract. In that case, we are just going to show year after year under current assets how it's going to be. And so for the current assets for 2015, you are going to show receivables. The actual receivables figure for 2015 was 20,000. That was after writing off bad debt. And then you say less provision for doubtful debt. That was the full figure for the year, which is 1,000. So that will give us a net receivables of 19,000. So this is how you are going to show it in your statement of financial position. And then in 2016, you show your receivables, how it's going to be. The receivables figure for 2016 was 25,000 Ghana cedis. Then you now say less provision for doubtful debt. And now when we are taking the full figure, not the difference, 1,250. The difference was 250, yes. But when it comes to the statement of financial position, we don't care about differences. And that is the difference between the two extracts. So that's going to give us 23,750. Then you do the same for 2017 and for 2018. You are just going to show the receivables figure, take out that whole balance carry down figure for provision, and then you are done. So this is how to go about the provision for doubtful debt. As a matter of fact, I'm very sure that your difficulty has been made very easy from what I have explained, but we are not done. I'm here to talk about bad debt recovered, and we may even prepare debtors account as well. And then I'll also talk about provision for discount on debtors. But remember to subscribe to the channel as usual. As I say, share this video. We are still growing and we are still improving day by day from your comments and your suggestions. We are here to serve you and to make sure that difficulty in the field of accountancy and finance becomes very easy. So until we meet again next time for the continuation of this topic in the part 3, it is bye for now. God bless you.